Tony Dwyer. Do you go to cash this morning?
No. Boy, I need a good laugh in the morning. You're great for that every day on the show, Tom.
I keep it up, and I'm giving away Game of Thrones spoilers. Go.
Well, on those prior, I think it's really important on those prior corrections. Those were driven by interest rate fear. In other words, the Fed indicated they were going to do 4 interest rate hikes in February, similar to 1994. Right. You got this 10% pullback very quick on fear of Fed, and of course, you went into the end of the year when they inappropriately hiked 2 times in the fourth quarter.
Buffett loves Amazon. He started buying right now. Tony Dwyer was buying $1 million years ago. We know that. You don't comment on individual stocks. A given blue chip company, 3M, Amazon, whatever, if I loved it before the presidential tweets, don't I still love it after the presidential tweets?
Tom, the market was set up for, but we put it out as a cause for pause because the market had just gone straight up. You had the VIX back to 12. You had Investors Intelligence newsletter writers up to 56% bullish, which is generally kind of an overly optimistic level. And the market just got extraordinarily overbought on a tactical condition. Here's what's different, though. Rather than fear that you're going to get those 2 kind of declines that you highlighted, it just doesn't, you don't have the same interest rate backdrop. You have a dovish Fed pivot. You have green shoots coming out of the turn in some of the OECD and PMI global indicators. So the economic activity is going to be okay, and the Fed policy is very different than where it was during right prior to those 2 major declines.
Tony, are U.S. stocks expensive?
Actually, if you go by the median over the history of time, yes, but you have to change it, and this is really important for the viewers. You have to adjust it for inflation expectations. When inflation is between 1 and 3, when core inflation is between 1 and 3%, the market historically trades at 19 times earnings. So rather than, we don't really have to guess where it's going to be. It actually was there from the fourth quarter of 2016 to the fourth quarter of 2018. So for 2 years, it matched that average multiple that you get to in low inflation. So, no, I don't think the market's expensive. I think it's slightly inexpensive as long as you're able to avoid a recession.